Hello everyone, petar.jacimovic here from vikefanalysis.com. I wanted to post the update on my USD Canadian positioning from yesterday, and as you can see, if you follow my work, you see that I bought with two positions yesterday pretty much in this area here, 1.3 like 690 level, and I'm in right now in plus 123 pips on two positions. So my first target is actually the area 1.3875. Someone asked me on the Forex Factory thread, so this is the answer for him. So my fixed target is basically 1.3875 area, and that's about prox 60 pips away from current price. And if price reach that point, I will probably take 190 pips, so almost 1-to-4 ratio on the first target, since the risk was about 50 pips. And if the price reaches my fixed target, the first fixed take profit area, that will be that absolutely 190 pips, which is approx 1-to-4 risk reward ratio on the first setup. So risking 0.5 and taking about 2% in this particular position. In my second position, I will let and see if I can reach this area 1.3980, which is my second upward station, and that will be the approx of 300 pips, or about 1-to-6 risk reward ratio. I can even take about 3% risking 0.5, so in total maybe I can even create like 5% just in this, using this good conditions on this currency pair, which happened yesterday. So this amount about my positioning and my take profits. My stop loss are pretty much secured in the break even. Of course, if I see any big movements, any massive buying climbs before my fixed targets, I will exit manually one position. But so far, this is quite okay volatility. News came out for Canadian core CPI, a slightly better. The forecast was 0.2%. It came out like 0.3%, but core retail sales month on month, actually the forecast was minus 0.5% and came out minus 1.6%. So it's not good news for basically for Canadian dollar, and that also boosted this position even more to add even more value of this buying and holding this buying. So again, the reason for positioning I want to speak today, I will try to explain you very clearly what's our major mistakes from retail traders and from non-professional traders, and so you can avoid these mistakes in the future and work on them. So first of all, you must understand that in professional world, every day it's not tradable. That's a first rule. You must understand what conditions you need to see, which got the highest potential win ratio and which got the highest potential risk reward ratio. So that's the key part. Don't trade often. Read the right conditions to happen. When they happen, you analyze the market, and then you position yourself. You follow and manage your setup, and slow. If progress is good, you put stop loss and break even, and then watch closely price action, how it's progressing. It's everything good, or you need to exit earlier than you planned on something like that. So also about the technical analysis. Technical analysis is one part in professional trading, and not every technical analysis. That's one of the things I wanted to explain you. So if you work like patterns or whatever you work, or if you work through price action, you work the patterns, you work the candle formations, or whatever, Elliott wave. So it doesn't matter what you trade. If you don't know to use the volume analysis, the volume is key for any professional trader, for any bank, for any hedge fund. They trade on liquidity. You must understand that part. That's what I'm trying. That's what I'm teaching my mentorship program as well. So that liquidity, reading the high liquidity and benefit from the large liquidity when where is the highest win ratio and where is the risk lowest at the same time, and where is the risk reward ratio potential also highest. You want to trade these conditions instead of trading the average volatility or low volatility currency pairs, you know. So a lot of traders creating the one big mistake, trying to predict every day where the market is going, and trying to trade every pair in every hour, every day. That's totally bad approach. In professional trading, what we are doing is we are waiting the right conditions. We're waiting the right conditions to happen, and then to try to position ourselves if there is a possibility. So what's the right conditions? We need a large liquidity, and there is a lot of there. You need to know what's the large liquidity and how we actually trade the large liquidity. So it's not always good to trade a large liquidity if the price action don't confirm later on. If we don't have what we want, then we will skip that large liquidity. But when the big thing to actually to make me to watch even chart and open the charts, it's that I need to see liquidity and something big to happen, some big price action, unusual price action, unusual volatility, the volume spikes, the climatic actions, and so on. Okay, and when that happened, then there is I start to analyze that volume activity and what will happen after. Analyze the price action, dynamic of the price action, and dynamic of the volume later on after that, after something big happened. What the people usually trying to do is they trying to predict the news, they trying to predict the big news or predict the big movements, and trading the before before big events, or trading during the big events. And that is one of the biggest mistakes as well. Don't try to predict something. Try to understand what's happened and to benefit from that what happened large in the background. So you don't want to trade and to set up where the risk is highest. In this business, in any financial market, not just forex, stock, whatever, futures, the key thing is to keep risk under control and to take the lowest risk setups where you have the highest probability of profit, and when you have the largest space for profiting because of that large liquidity we trade later on. So you don't want to trade before, for example, some big event and try to predict if the price will go up or down in the news. That's a gambling pretty much. So that means that you will gamble. You don't want to trade it during the news, because that's also gamble, because in this first few minutes and so on, first hour, that's absolutely gambling. But what you want to try to do is to trade after, when the public and when the retails in the public is feared and exhausted and so on. So then you see if there are any good potential setups and placement for your orders to ride with the banks and hedge funds. Remember one thing: every hedge fund and every bank watch liquidity and trade according to that. So a lot of traders trying to predict using different techniques and so on, trying to predict what will happen. But basically what you need to do is to understand the market, and to understand the liquidity and to read that liquidity properly to benefit. As you see, look at the USD Canadian dollar right now. So again, another very strong setup I took. I have a very high win ratio this year, and again, it's just if you observe professionally and if you understand the market, and if you follow price action by price action, if you understand to read liquidity and trade on, you can benefit a lot. For example, in the yen, in the Japanese yen setup 1 week ago, if I waited, for example, more, I took the 1.5 ratio, but if I waited, I could even take 1.10 risk reward ratio, risking 40 pips, and price dropped in a few days 400 pips. So amazing returns, risk rewards in these situations. Amazing win ratio, and which is most important thing, it's you trade when the risk is lowest, when your position is at the lowest risk, and that is after the crowd fight over buying and selling whatever they do, after there's something big happening. So the professionals use this liquidity and just trade on that. Okay, so they know if there is a big liquidity, there is a big attention of this currency, if there is no professional selling it, there is others so exhausted here after this massive drop, that must be a buying, and of course they bought as like I did. So again, this is how you trade. This is exactly how you trade, guys. So look, for example, this is I can scale out here, and I will do scale out here. It's a Friday, and I will close one transaction here and I'll let the second one. Why I will close? Basically because of this 80 pips bar, it's creating the climatic action. So I want to scale out. I don't want to risk potential that supply came in or something like that just because of 30 pips. So I will be happy to close here one transaction 140 pips and take almost one free ratio. Okay, so I will exactly do that and close my order right now here. So I will close the order. Why I closed before? Again, because of that massive liquidity and 80 pips run happening here. I have the second positions to ride on, and the second transaction will be here. So I booked the profit. That's how you do. My fixed take profit was here, but again, price spiked 80 pips here, and right now it's trading around 1.3826. So I didn't want to wait the 35, 36 pips. You know, I want to scale out. This was around 1-3 ratio. It's a very good scale out. I scaled the one transaction, and I will add second on the purpose if this continue higher. Okay, so maybe I can catch about 1.5-1.6 ratio. So as you see, I scale out. That's the profession. What's the professional doing? So basically, you have the fixed targets, but if something big happened before and so on, you need to adapt to that and don't want to risk to put your good setup and don't benefit. So that's pretty much how you actually trade on. So one thing, the professionals wants to profit, the amateurs wants to predict. They want to be right instead of booking profit and taking profits, and so on. So there is a lot of things there you need to understand. You need to understand the intermarket relation, intermarket correlation, how the color the stock, futures, and the forex, and so on. Observe that part, then watch the understand the news events and so on, the high impact news and so on and so on. So basically, it's not an easy job. It's take a time to learn, and basically my mentorship program is absolutely for people who wants the full-time trade, and who basically for people who wants to become professionals, and the forex will be their main profession. Again, I will tell you, so a little bit on mentorship program. So we have 7 days course. We cover everything from starting from the price section, then we use the base of the volume analysis, then advanced volume analysis, and also VICAF analysis. We use the analyzing of the high liquidity levels, what we need to have, what conditions are good conditions for trading, how we establish positions, how we manage positions, what's the risk size we put, what's the minimum risk reward ratio we're going, also how we follow the setup, how we manage, and absolutely everything. My daily routine and professional routine, how you're doing, I absolutely teach you how to do that in my 7 days mentorship program. So I advise you to really start that, and because you can lose a lot of time, even years, trying to you know, to learn something from the internet or stuff like that, which are pretty much everything is same. You know, you learn the same thing over and over, and basically you know, there is absolutely a lot of things you will not find on the internet, and there is just few mentors who will teach you this, the professional way of trading, the professional daily routine, what you need to focus on, and how to build setups, and so on and so on and so on. So again, this will be all for this video. I just wanted to update this my positioning. I just closed the one position, I took the one pre ratio, or 1.5%, and I will add the second positions to this, like, let's say the final target in this particular setup, which is around 1.3975. So that's it. Again, follow me if you want to subscribe on my YouTube channel, feel free to like or comment there, and of course add me on the Skype, petar.jacimovic, if you want if you want to start my mentorship program, so we can speak there. See you guys, and see you next week.